So it's your girl Constance Carter, and I want to talk to you today about how to get this money for real estate. It's so important. First, I want to give a shout out to my boy Raheem Shabazz. I did a podcast with the brother yesterday, and he hooked me up with his different brand. And so I put it on, and my daughter was like, "Oh, you different?" I was like, "I thought this was DFRNT. I didn't know it different." But anyway, Raheem Shabazz, B1 FBA brother who speaks all over the country. I did a great, amazing podcast with him yesterday, and I want to give a shout out to him for the shirt. I was in Atlanta yesterday, and I spoke at Justin Burns conference. It was quite amazing, and I am stalling right now because I'm doing something on here. Um, so, as you are coming in, I want you to put in the comments where you're hailing from. We're gonna get right down to it. It's your girl. We're gonna get right down to it. But where are you watching from? Because I know I always have people from all over the world, and I want to shout you out. I want to give you some props while I'm trying to fix my computer. Where are you hailing from? What's up, Zahidi? And Charles Noonan and everybody that's on Facebook. Put in the comments where you are from. Facebook is just tripping today, huh? All right, bet. It's gonna be what it's gonna be. So let me get back over to StreamYard. Oh, I'm on several different platforms. I'm on YouTube, Instagram, Facebook, LinkedIn. And I see Patrice is from California. What's up, Kui? I see Tiana from NYC, the Boogie Down Bronx. Where y'all from on Instagram? Where you guys at? I see Lisa from Douglasville. Hey, Lisa, how you doing? It's your girl, Constance Carter, in partnership with Dr. Boyce Watkins, Fly Nubian Money, Fly Nubian Queen. I want to make sure that you subscribe to the Fly Nubian Queen. Subscribe to I Am Constance Carter on Facebook, on Instagram. Follow me on YouTube because YouTube don't be giving your girl no love. I be getting like 12 views on my YouTube. I'm trying to build that up. But I want to talk to you about wealth. You guys, wealth. One of the questions that Mr. Raheem Shabazz, who different, shout out to Raheem who gave me the shirt, he asked me, he said, I think he said it, according to statistics, it's going to take black people 200 years or 130, it was like 100 or 200 years to catch up with white people. We had, I think he said 234 years of slavery plus 100 years of Jim Crow and segregation. And we've been enslaved. We've only been free for 134 years. So we were enslaved as African Americans longer than we were free. Did you realize that? So when they tell you to pick yourself up by your bootstraps, we were enslaved longer than we've been free. Now, it doesn't mean that we don't have opportunities because opportunities are abundant, but let's examine that because after freedom, quote unquote freedom, we were also hit with things that prevented us from building wealth. Wealth in this country is 80% of wealth in this country is generated through real estate. Well, what happened is we were prevented from partaking in real estate. And if you see me just going up and down, this is Instagram, this is Facebook, YouTube, LinkedIn down here. But what happened? We were cut out. They said they didn't want to give black people money. So when they came out with FHA loans and all of those other loans, they wouldn't give us money. They did what's called redlining. They wouldn't do, and they wouldn't give money to certain people in certain areas. So they kept us out the game, out the wealth building game. They did homesteads for white people that they did not give to black people. They promised us 40 acres and a mule after they got $16 trillion of free labor from us that they never delivered on. Then you have predatory lending that, these big corporations and commercial lending companies just got sued for just a couple of years ago for discriminating against people that look like you, that look like me. Okay. So the road has not been easy to wealth for us. So when people like Dr. Phil's punk ass says to pick up that he says that reparations would be disastrous. You guys got reparations. You guys got free land. You guys got, you would think that with the wealth gap being what it is, right? So you have 70% of our white counterparts who are homeowners, and you have only 43% of African Americans who are homeowners. You would think with the leg up that they were given, it would be 90% of them would be homeowners, right? Because they have been given all of these opportunities that we were prevented from. It's just the bottom line is the reality of it. And so we have all of these obstacles that were put in our way, and yet 43% of us are still homeowners. But I want to talk to you. It's so important that more of us get in the game. It's so important that more of us become homeowners because that's the quickest way to wealth. So when idiots tell you don't buy a house, that's false. You should buy a house. You do not have to buy the dream home. The first home don't got to be the dream home. Just get into something so that you could use it as leverage. We have to start thinking about wealth in a different way. Stop thinking about it as like I'm about to get my, my McMansion and all that stuff. No. Look at it in terms of this is an investment vehicle for me to get to the next level. Multi units are a great way. That's one of the way where I'm able to get my clients into more doors more quickly. It's an awesome way to get in. But we have to get in the game. And there are ways for us to get into the game. And so I want to share with you a few ways that you can get into the game. Here's the thing. There are so many things that you could do, but let me just tell you the easiest way is if you have a job, you can't own a home. Let me repeat myself. If you have a job, you can own a home. If you have credit challenges, that can be overcome. I ain't scared of credit. A lot of us be scared because we didn't file bankruptcy. I filed bankruptcy, and within a year, my credit score was it wasn't quite a 700. I was almost in the 700 club. So it's not, you can get back in the game. I have books that have helped thousands. I have this book called Build Credit to Build Wealth. It's a workbook. It's a dope ass workbook, you guys, that if your credit is challenged, pick up this workbook on Amazon. It's freaking dope and amazing. And I'm not just saying it because I wrote it, but it is a great book. I got lots of great feedback. This one right here, Keeping Score, was a bestseller. This is written for an elementary school. Like people be trying to, people want to be so damn deep when they talk about stuff. They be trying to overcomplicate stuff. Credit, wealth, all of that is not very complicated. It's quite easy. If you are willing to sit down and give yourself an hour or two to research it, then it'll change your life. But you got to be willing to put a little bit of work in it. But it ain't that deep. I love deep people, but stuff don't be as deep as people try to make it. So your credit can be overcome. If you got a job, let me just tell you the first thing, you can own a home. My brother called me yesterday and he was like, yo, niece. That's what he calls me. They call me niecey in my family. Yo, niece. How long you got to be on a job to get a house? And I said 2 years. Most people think you got to be working in the same job for 2 years. You don't got to be working in the same job for 2 years. You just have to be employed for 2 years. So I had a client, it was an Indian lady. She worked at a gas station. Then she worked, and this is all in a 2-year span. She worked at a gas station and then she worked in a warehouse. And then she worked, when she came to me, she was working in an administrative capacity. She didn't lose any time with her jobs. She went from one job to the next, but she had been gainfully employed for 2 years. And if there is a gap, so say you were unemployed for a couple of months, that's fine. You just can't be unemployed for more than 6 months, but you could still get into a home. So that's the first thing I want to tell you. If you have a job, you can own a home. Okay. If your credit is challenged, that is okay. But in 2023, with all these resources available to y'all, come on, y'all, we should not be having bad credit. And let's just keep it real. Let's keep it 100. Let's take responsibility. There are things that happen. Trust me. I have an Airbnb out in Arizona, and I got a collection notice like a month ago for that Airbnb for something that I didn't even do. So, and it dropped my score like 50 points. Well, I sent over a verification letter, which I have a copy of the verification letter in my book, Keeping Score. I sent over a verification letter. They verified that it wasn't mine and they took it off and it increased my score back. So stuff happens, right? 1 out of 5 credit reports have errors in them. So there are things that happen. But if you have a job, there's no reason. I don't want to be as crass to say that. But in this day and age, I would say that you should be working on your credit. We shouldn't be talking about having bad credit like that in 2023. There's too much information out there and there are too many resources. Okay. Number 2, there are opportunities for you to get into a home with no money down. Y'all want to talk about the no money down opportunities out there? There are opportunities that you can get out there with no money down. Now, there is down payment, and I want to talk to you about some down payment assistance. Jay said, does independent contracting count as a job? Absolutely, it does. So and somebody on Facebook said, is self-employment okay? It does. So you guys basically ask the same questions. Now let's talk about people who are self-employed, because this is important. And I'm going to talk about the self-employment thing in the vein of these different types of loan opportunities, right? These lending opportunities. If you are self-employed, most self-employed people, we not trying to claim all this money on our taxes because we don't want to pay Uncle Sam. If you're self-employed, you need to have been self-employed in the same capacity for 2 years. So you need to have had the same job or something similar. So if you're an independent contractor and say you work for a couple of different companies as an independent contractor, that's fine. 2-year history. If you're self-employed, so say you have your own business, you need to have had that business for 2 years. But the thing about it is, a lot of times we don't be wanting to claim all this income. So then we write everything off. So we ain't got to pay Uncle Sam no money. You have to pay Unc something. Either you're going to get it on the front end or on the back end. Okay. So you can get loans if you don't show your income, but you're going to have to have a little bit more skin in the game. You're not going to get a 3.5% down loan if you're not claiming any income. Okay. So let's just keep that real right now. All right. So self-employed, independent contractors, they all 2 years, you Gucci. All right. So let's talk about the down payment assistance program possibilities. They work for independent contractors. They work for self-employed people. Those are full documentation loans. You have to have all your documentation. You can't get it with no asset, no income. You can't state your income. Say, back when about 5 years after I started in real estate, we had stated income loans. When I tell you those were the bomb, all you had to do was have breath in your body, and we could say you made 6 figures. All you had to do, you could be a janitor. We'd be like, janitor make 20 grand a month. Not me, I didn't do that. But it was like janitor make 20 grand a month and you got a loan. You put a couple dollars down and you good. And that exacerbated the foreclosure market. Those loans are still available, you guys. But there is a requirement, and we'll talk about it. Stated, who is this again? Stated income. That means we are stating your income. Jay said, what's a stated income loan? That means we are stating your income. We're basically saying you make $15,000 a month or $6,000 a month. So there was no verification process to see if you actually made that money. They gave you the money just because you stated it. Now, after Dodd-Frank came out and all of the overhaul on the lending process, all of that stuff happened. They outlawed stated income loans for primary properties. So you will not see a stated income loan for something that you're going to live in. Stated income loans were initially for investors, for people who didn't want to claim their income, for people who didn't want to pay Uncle Sam. And everybody, the average everyday person, messed it up for stated income people, for those investors, because they had these loans where they had to put a very little amount of money down and they were able to get into these homes. But now everybody started doing it. Then they didn't want to pay. They couldn't afford it. They couldn't afford to pay these high ass mortgages. And so they ended up foreclosing on these loans. And so the stated income loans that they have today are only for investors. So this cannot be an owner-occupied loan if you get a stated income loan. Again, a stated income is me saying, yo, I do X, Y, and Z. You got to have proof. You got to have an LLC or some type of business. And you say, I make $10,000 a month. Yeah, they will accept that. But the skin of the game is you're going to at least need 20% down. So you ain't getting no stated income loan coming in, getting 100% financing, 5%, 10% down, 5% down. You're going to have to put at least 20% down, all the way up to sometimes 40% down for a stated income loan. But they're available. So here's the thing. When you're talking about dealing with Uncle Sam, you're going to have either you're going to have to pay him on the front end or on the back end, right? So either you're going to have to pay him in taxes or you're going to have to put that money down on a house. What would I rather do? I'd rather put it into something that's going to grow. Paying Uncle Sam ain't growing. Paying Uncle Sam, remember I talked about, if you saw my previous live, when you overpay Uncle Sam, people be around there like, ooh, I'm about to give my tax money back. Ooh, they be y'all excited. Your tax money, you are just lending Uncle Sam money tax-free. So you are overpaying Uncle Sam. So when you get your tax return back, that's just an overpayment that you had gave them tax-free. So they got your money tax-free. But what happens is if you owe them, they are charging you compound interest. So it's better, I wouldn't necessarily overpay. I wouldn't set up my income to where I'm overpaying Uncle Sam. I would get as much as I can. And if you're disciplined enough, you would put it into a vehicle that's going to generate you compound interest instead of you paying them a compound interest on your money. Okay. That's a good secret. That's a good tip. So stated income loans are available for people who are self-employed. So thank you for saying that. What's up, Madeline from Houston, Texas? All right. So the second, so let's get to down payment assistance. So for down payment assistance, you need full documentation. You're going to have to show yo two. And have you guys ever seen my video 222? We got you by Ladies of Catalyst. We got bars. But anyway, 2 years tax returns, 2 months bank statements, and the last 2 pay stubs. 2 years tax returns, 2 months bank statements, and the last 2 pay stubs. That is what you will need in order to get a full documentation loan to qualify for down payment assistance. You're gonna need to show your income. Here's the thing about down payment assistance. Some of it you have to pay back, and some of it you do not have to pay back. Okay, some of it is forgiven over a period of time. Some of them you have grants, and some of them are silent seconds. Some of them are income. They have income restrictions. Some of them do not. Some of them have house pricing limits. Some of them do not. So where you can find information on down payment assistance in your area, go to catalystrealestate.com/DPA. Somebody put that in the comments. catalystrealestate.com/DPA. And I provide you with down payment assistance information in all 50 states. So whatever jurisdiction you're in, go to my website, catalystrealestate.com/DPA to get information on down payment assistance. Now that's going to be one where it could be all of your money down. And the great thing about that is that's getting you in the game. The bottom line is we need to get you in the game because you need to use that first house. It might not be your dream home. It may be the leverage that you need. I remember that I had an agent. He was a brand new agent, and he was selling this guy a house. And he didn't want to sell a guy a house in a certain area because he was like, this is a bad area. You can't do that as a real estate agent. You can't tell somebody something's a bad area. That's all relative. I remember when I first got my real estate license, and this person was like, hey, would you live here? If what I would do is not important. The important thing is what would you do? So if there's it may not be the best neighborhood to start off with. It just needs to be something that you can live with, and check the police records. You can go on and look at the police records and see what kind of activity that they have in that area. But it may not be the area that is your final destination. Use that as leverage. There might be a few more steps that you get some other property, you acquire some other property. Some people even purchase property. They'll stay in their apartment. They'll stay renting, and they'll just acquire a bunch of property. We did have a client, this Middle Eastern person from San Jose. They were renting in San Jose, but they were coming to the Central Valley, California, and they were buying a bunch of multi-units. They was building wealth that way, and they had so much money. So there are definitely strategies, but you cannot use down payment assistance for a home that you are not going to live in. That's very important. The second way, Wanna Be Natural said, what if you want to try to renovate an old house? I was just talking about that yesterday on the podcast. There are renovation loans available. So say you want to get into a home and maybe it needs some work. Maybe you want to add a second floor to the home. Maybe you want to it's /DPA. I'm sorry, catalystrealestate.com/DPA for down payment assistance. That's where the down payment assistance is. Say you want to add a second floor to your home. Say you want to add a pool to your home. Say you want to add an addition to your home. You can purchase a home that may not be in the best condition, but FHA will finance the renovations. That's dope as shit, right? So you can get into a home and you can make this home your own. This is called an FHA 203K loan. It's a 3.5% down payment loan. You only need 3.5% to put down on it. You will need to show your 2, 2, and 2. You will need to have a job. You'll need to have some decent credit, 580 credit score, 203K. Yep, 203K loan. And you can finance the entire renovation project. So it might not be your dream home to start off with, but It's a way for you to buy a property and then make those renovations. Say there's a property in an area and it's a great area, but the house is toe up. You get this 203K renovation loan and you can make this property exactly the way you want it. New carpet, paint, bathrooms, all of that stuff. And they will fund it and finance the whole thing for you. So thank you for that. If you already own the home, Want to Be Natural said, what if you already own the home? If you already own the home, you can refinance the property, pull cash out. You don't have to get a renovation loan. If you have equity in your property, you can get cash out. If you don't have that much equity in your property, then a 203K loan might be the best option for you. So you don't have to get any type of renovation loan if you already own the property. If you have equity, most people use the equity in their properties to refinance and pull cash out because the equity in their property end up giving them more value for the property. That makes sense. All right. So down payment assistance, there's down payment assistance everywhere. There's also, and that could give you that you can get into a home with practically no money out of pocket. You need to have, sometimes you'll have an agent. Sometimes you'll have to come out of pocket with something, but you'll need to have an agent that knows how to negotiate certain concessions on your behalf. All right. If you live in a rural area, because I know we have people that are watching from all over the place. If you live in a rural area, you can get a USDA loan, which will give you 100% financing for a property if it's located in a rural area. So you can get a multi-unit, you can get a single unit, any 1 to 4 unit, you can get 100% financing if it's in a rural area. There's no income. There are some income restrictions. I was never really able to put anybody into a USDA loan in California because there was not that much rural property, and the qualifications were a little bit strenuous, but people are doing it all over the place. So USDA loans are great for rural areas. Okay. If you are a veteran, let me tell you a story about a veteran. One of my veteran clients. Veterans, I love veteran loans, VA loans, because they are no money down. This is literally no money out of pocket. You can literally go in there with no money out of pocket. Even you don't have to pay for the appraisal. You come in there. So this client of mine, he bought a fourplex. He didn't have to come out of pocket with no money. He has low interest rates because VA loans are no interest rates. The seller has to do certain renovations. They have to make sure that the roof is good, that there's no termites, that all of the wood rot and everything. If there's no Section 1 or wood rot or anything like that. And so for veterans, so this guy, he got into this property. I forget what he paid, but I remember his payment was $1,800, and his mortgage. So his mortgage was $1,800. 3 of the units were occupied, and they paid $1,000 a piece. So he was getting $3,000 in revenue off top in income. So his mortgage payment was $1,800. He was getting $3,000. So what was he cash flowing? He was cash flowing $1,200 a month walking in. He didn't come in with no money. He was cash flowing already. So he came in collecting rent, and he didn't have a whole lot of money to qualify. His income wasn't enough to qualify. So he was able to use the units that were occupied as income to help him qualify for the loan. So you have to stay in one of the units, for at least a year to qualify as an owner occupied, because it's an owner occupied loan. So after that year, he got out of the property. He raised the rent, and he put somebody else in that 4th unit. But say he never even raised the rent, and all of them were $1,000 a piece. That's $4,000 he made. He put no money in there. You could do this with a USDA loan too. You could do this with down payment assistance as well. He didn't put no money in there, and now he's making, say, $4,000. His payment's $1,800, and now he's cash flowing $2,200 a month, and he ain't put no money down. That's possible. So I love VA loans. You're able to do things like that. Yes. Lisa said, I was told by USDA that you can use their loan to buy income producing property. Yes. So that's like a 1 to 4 unit. Absolutely. Black Widow said, what if you own your home and property and want to sell for another home and property? How easy can that be? Absolutely easy. Yeah. So sell the home. You take the equity and the leverage. And that's the whole purpose of having equity in your property, is you can use that leverage to build. So you could buy other properties. So you can go and buy a couple of properties that'll yield you some income, and then you wait a little bit and get some that before you buy your dream home, or you can use that property to buy your dream home. Duncan said, I'm in South Carolina in a rural area. I'm here for the VA info and great info. So VA and USDA for you, Duncan. USDA is for the rural areas. VA if you are a veteran. Yes, 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 honey. All right. So yeah, somebody said that's fire. It's a dope ass way if you're a veteran. But if you have USDA or if you get some kind of down payment assistance, these are the tips and the tools that you use in order to use real estate to build leverage so that you can create your wealth portfolio, your real estate portfolio. That's what we need to be looking at. Not looking at real estate as just a way or a tool to have a place to stay, but use it as other options. I got a couple of properties that I use as some of them I flip from some properties. I also have Airbnbs. Now, them Airbnb joints, like I got one in DC, my daughter. I bought the property for my daughter. It's hers, it's ours. But that's in DC. And that joint stays booked. And it's not cheap. I have one with my son in Stockton, California. That one stays booked. Got one in Arizona. I think 60 minutes after we put that one on, and that was back in August. It booked up until April, like within 60 minutes. It's crazy. So there's still definitely opportunities in the Airbnb space. Duncan said, I'm interested in Airbnb investing. All right. I will do a training on that. Join my gym club, the Grow Your Money Club. Inside the Grow Your Money Club, we're going to talk about Airbnb investing. So go to growyourmoney.club, and we're going to have a training specifically on Airbnb investing. Growyourmoney.club. And you need to join the VIP so you get access to me. All right. You can use USD. So thank you for saying that. You can use USDA for income producing property for 1 to 4 multi-units. What I want you to do is I want you to Google USDA loans, go to their website, and it'll show you single family homes. It shows you multifamily homes. Also, you can put an address in there to see if that address qualifies for a rural property. That's how you determine if this property is in a rural area, because you have those properties where you're not quite sure, like, it's kind of borderline. Go to USDA, Google USDA, put the address in there, and you'll be able to see if that property qualifies for USDA. All right. The other loan I wanted to tell you about was the stated income loan. We talked about a little bit about that. So the way I use stated income loans now is when I'm flipping property. Okay. So if I'm not paying cash, which a lot of times you do not want to tie up your cash when your capital when you're flipping property. So I will do a stated income loan. That's me saying, they close in like 7 days. Some close in 5 days. They're very quick. You have to have some type of business. You have to have some kind of experience flipping homes. But I just basically say, this is how much I make. And you put 20% down. There are fees associated with it. The rates are a little bit higher because they are hard money loans or they're private money loans. So the rates are a little bit higher. But when you're investing and you're flipping property, that stuff it's interest only. So interest only payments are a lot lower, but you're not holding on to it for a long period of time. So you can get in and get out, stick and move on that. There are fees, and sometimes there are prepayment penalties. If you pay them off too soon, you get penalized. And if you hold on for it for too long, you can get penalized. So stated income loans are great for flipping property. And then lastly, the last loan I wanted to tell you, Navy Credit Union has a loan. I like Navy Credit Union's loan. If you are a member of Navy Credit Union, they give you 100% financing. No PMI. The rates are pretty significant. They're like in the 7.5%. But listen, you guys, if you guys are going in here with the mind of an investor, you're not going here with the mind of a homeowner. People get so caught up in interest rates, which are important. They are important. But what's even more important is building wealth. And when you have low inventory the way you have right now, you don't have no inventory. You have very low inventory, which means it's still a great time. It's still a great market for sellers. It means that the equity is still growing at a significant pace. So interest rates matter, but not as much. So you got to look at what's the return on my investment going to be. So Navy Credit Union has a 100% financing loan. They will get you in a home, no down payment, no PMI, private mortgage insurance, which comes with loans when you have less than 20% down. Duncan asked if refinancing now is a good idea. You're not going to get a better interest rate. And it all depends on it. I'll say this. because I still have clients that are refinancing. It depends on what your goals are. Okay. So if you're refinancing for a lower rate, you're not going to get a lower rate in this, depending on when you refinance. Now, if you refinance, like I had one of my agents, bless her heart, Kathy Jackson, rest in peace, Kathy. She had so many people who had held onto loans that were 7, 8, 9%. And so she was able to, just refinance so many people because they had these higher, and they didn't care. These people are investors. They don't care about these 8, 9% interest rates. And so we were able to get them something better. So if you're looking at a better interest rate, it depends on when you got the loan, you may get a better interest rate. But really, it's really about what are your intentions? What are you doing with that money? Okay. So here's what you need. Here's a litmus test. Can I afford that new payment if I refinance the home? Is it affordable for me? Do I have cash to pull out of it? And what am I going to do with that cash? Is it going to serve me where I'm going to get a return on my investment? That's how you look at it from the perspective of an investor, not just a regular consumer. Because rates matter, but rates are more regular, and consumers are more concerned with rates than investors, people who are looking at their ROI. Okay. The Navy Federal Credit Union loan, I believe it does. You know what? I'm not quite sure. I don't even want to lie about that one. I'm pretty sure it does work for 1 to 4 units, but Google it. Google that shit for me. And then when you do, come back and let me know. So I think it does. I think it is for 1 to 4 units as well, but it's 100% financing. Also, a lot of these lenders have these community lending loans. Bank of America, your Chase banks, all of those have loans that are targeted specifically for certain areas, for certain incomes. They are below market loans, so their interest rates are going to be lower. And a lot of times they're going to be no down payment loans. So all of those major banks, they have to have these loans. I forget what they're called off the top of my head. If somebody knows, let me know. But they have to set aside a certain percentage of their funds specifically for these types of loans to help people in certain areas, certain income limits, and all of that. Everybody has all major banking institutions have these. So these are loans that all of them have. Do your research on that. I can't remember what it is. Okay, thank you, Lisa. Navy Credit Union is for 1 to 4 units. So yes, thank you, Lisa. I appreciate that. Thank you, girlfriend. Thank you. See, your girl don't know everything. So I try to know as much as I can, but I don't know everything. Also, when you're looking at down payment assistance, I want you to know that there is a difference between a grant and a loan. There are grants out there that will help you with your down payment that you never have to pay back. So there are grants out there. So you may not have when you're looking at down payment assistance, you're thinking this is free money. Ain't no free money. Pretty much ain't no free money. You're going to pay for it in the interest rate. You're going to pay for it in a silent second. You're going to have to pay for that money. You're going to have to pay that money back at some point most of the time. But there are grants out there that you do not have to pay back. There are loans out there that are forgiven over a certain period of time. And I know I said that in the beginning, but I just want to make sure that we're clear on that. Finally, the last one I want to talk about is the no employment loan. The no employment loan. That is the DSCR loan. That is the debt service. What is that? The debt service loan. What does DSCR stand for? All right. So for the DSCR loan, you do not have to have income for this loan. The DSCR. You do not have to have the debt service coverage ratio. The debt service coverage ratio loan, the DSCR loan. And I hear a lot of people talking about the DSCR loan, right? So that's kind of the clickbait. People like, you can get a loan, you can get a home with no income. You can come over here and get a loan. And so I be having people DMing me all the time. Girl, can you hook me up with a DSCR loan? And so they think because they ain't got no job and they can get this property, they can get a home with no income. Well, there are... Thank you. DSCR, debt service consolidation loan. Yeah. What I say? I forgot. So for the DSCR loan, there are requirements. They close fast. They're great loans. The rates are a little bit higher. They're interest only loans. But here's the thing about the DSCR loans, and I did a reel on it today too. You have to have skin in the game. Nobody's going to give you a loan with no money down. You say you ain't got no income. Well, we need to see something. All right. So the DSCR, what they want is they want you to have at least double or 1.5% more than all the income coming in. And what are they considering for it for your expenses? They're considering your property expenses, your management fees, your capital expenditures, all of those things put together. So say if they are $2,000 per month, that property has to be bringing in $4,000 per month. If all of your outgoing expenses, or $3,500 per month, so you need to be cash flowing. Okay, so you don't have to provide them with any job, no income. They want to see that this property is bringing in money. However, you got to put some money down too. So you're going to need to at least put in 20% down, sometimes 40% down. It depends on those particular lenders. They have certain guidelines and what we call overlays. But this loan is available. Again, it's for people who they don't really want to show their money. They got this money maybe sitting, in a safe or whatever, and they don't want to have, because with traditional loans, you have to have your funds seasoned in the bank for at least 2-3 months. You don't have to do any of that. Bring your money to the table, bring your 20% to the table, and you're done. Okay? So that is a debt service ratio loan, the DSCR loan. So that loan is a great loan, but I don't want to mislead you in any way, thinking that you can just get in a home with no skin in the game, with no money down, and you ain't got to have no income. Those days are over. Those days are over. Y'all abused that. If you bought a home between the years of 2005 and 2008, you abused it, and now we can't have no more of those loans. They were inflating prices. They were, it was all kind of stuff. We would call it, and yeah, I did this too. We would call appraisers, and we were like, "Hey, I got this house. I need to get $450 for it," and they'd be like, "Yeah, I can't get $450 for it." All right, bet. Call another appraiser. "Hey, I got this house. I got to get $450 for it." $450. I don't know if we can get $450 for it. Okay, if you can't get $450, I'll call somebody else. Oh, hold on. I think I might be able to get $450 for it. And so they would do whatever was necessary in order to get the deal, to get that little $350 they were getting for the appraisal. Well, now, because of all the inflated pricing and all of the foreclosures, we can no longer do certain things like that. I can't as a lender. And oh, by the way, Constance Carter, we have Quick Funding. Quick Funding is my mortgage company. We're licensed in California, Texas, and Maryland right now. And this is a new company that we just formed because we had Catalyst Real Estate Professionals that we're now Quick Funding. And so now we're getting licensed in a multiple of other states, so we can help you with all of your financing needs right now if you are in Texas, California, or Maryland. Okay, but as a lender, as a mortgage company, I cannot talk to an appraiser because that's just against the law. We can't talk to appraisers because we was punking appraisers back in the day. But there are definitely some strategies, guys, that I really want you guys to use and to leverage, because the name of the game is the wealth game. 80% of wealth in this country is generated through real estate. The way that we close the wealth gap is going to be through real estate and a host of other ways. Y'all got the power of the internet. We have more power in the palm of our hands. Where's my phone? With our phone, I was right there. Than they had when they put the man on the moon. So I don't believe that it's going to, in 2053, our median wealth is going to be zero. I believe that there's so many opportunities out there. There's so much knowledge and information out there. It's there. It's all for you to grab it. And I want to help you. So I mentioned to you guys my gym membership, Grow Your Money Club. You guys, this is a great membership program for people who are looking to grow their money and not blow their money. This is a way for you to, an entry level way for you to just work with me. Like for less than $1 a day, you get all the information and content, training from not only me, but people that I know and all of my expert friends from all over the country that are going to help you. So go to growyourmoney.club and sign up for the Grow Your Money Club. And this is for everybody from all walks of life. Okay. Now, if you are a white, black, Hispanic, boy, girl, dog, whatever, if you can pay $49 a month, you can be a part of the Grow Your Money Club. For Black women, this is for you. I believe that the wealth gap that they're talking about it's going to happen with us. You know, they say if you give a woman a house, she'll make a home. If you give her a woman some food, she's going to make a meal. And I believe if you give a Black woman some financial knowledge, she's going to change generations in the game and the community and everything else. So my mission and my goal in life is to help 100 Black women in 2023, because in 2053, we ain't going to have no zero net worth. So I want to help 100 Black women become millionaires, increase their net worth by $1 million. And so I have what's called the Net 7 Collective. We just began our first cohort, and I'm excited about that. We got some badass, dynamic women who are going to just change the world. And I want you to be a part of changing the world. So if you are interested in joining our second cohort, it's going to start in August. The Net 7 Collective. Go to ConstanceCarter.com/Net7 Collective, or go to ConstanceCarter.com and click on Net 7 Collective and sign up for an interview. I want to interview you and see if you can be a part, if you can be a part of the community. You know, I interviewed over 70 people and I selected 18 for this particular cohort. So if you are interested, then I want to talk to you. Let's see what that looks like, because I want to help you to grow your money and not blow your money. Okay. So that is all I have. Again, make sure you subscribe to the Fly Nubian Queen. Make sure you subscribe to Constance Carter. I am Constance Carter. And most of all, please share this information out to everybody you know, because everybody needs to hear this game that I'm spitting. Everybody needs to hear this information. This is for you. And I love you. And the reason why I'm giving it to you is because I love you and I want to see you win. I don't know who you are, and I don't care where you come from. I love you and I want to see you win. When you love yourself and you just want the best for yourself, you want the best for everybody else. And I love myself and I want the best for myself. I also want the best for you. I'm going to make sure, Jay, thank you for saying that, because sometimes Instagram be tripping, but I'm going to make sure that it stays live on my page. But it's also on my Instagram, on my Facebook page too. All right. So thank you all for listening, and I'm going to go ahead and log off. I'm out on Instagram and I'm going to log off on Facebook. I love you. You guys enjoy your weekend. I'm going to be out. Concerts all weekend. It's going to be great. It's going to be awesome. Take care and God bless.